I want to make day trading as simple as possible for you, and as a result, I created these match cards basically where you can essentially, before you take a trade, you basically match a card that I'm going to be showing with you right now with the live market, and if it looks similar, then you literally just take the trade. That way you can visually identify what a good trade looks like and what a bad trade looks like basically. And this is going to be done by one, showing those match cards, but two, there's multiple cards to show you what good and bad looks like. So what an A plus trait looks like, what a B plus trait looks like, C, D, F, etc. Right? So we'll go line by line, piece by piece, step by step. So again, this is a match card game. It's a game, but essentially you're matching those cards to real live market, so you can make real money by literally just having this whole match cards, setting it next to you on your desk, your table, your wherever you are, and basically just eyeballing it. Okay, this looks similar to this. I should take this trade. This looks completely different. I shouldn't take this trade. But the ideal result is you learning which trades are high quality with low risk, which is an A plus trade, which I'm about to walk through in a second, and also the others that are low quality but also high risk, which ideally it's the two worst case scenarios that you don't want to have. So that being said, let's jump into the first one. So first things first is an A plus day trading chart right here. So if you see something on your chart looking exactly like this is a trade you 100% should take. If you're familiar with my strategy, the bottom is the 5-minute chart, the top is the 1-minute chart. I've walked through that full strategy in the initial MKU checklist where it's step 1, 2, 3, all the way to 16.2 that shows the full exact strategy. You can search that on the YouTube as well. And it walks through what high quality winning trades look like, low quality winning trades, medium quality, low winning, et cetera, right next to each other. But this is taking things to that next level. And this is on the channel as well if you want to check that out. But nevertheless, let me go ahead and screenshot this, walk through this piece, and we can go ahead and get started. So let's define why this is an A plus day trading chart as a whole. First things first, what we're talking about, let me zoom in right over like that. All right. So we have over here at this specific point in time a major supply zone at this point. Basically saying that before 9:30, which is on the left of this little white line that I just drew, and I'm deleting it now for context, what was the highest point of the day? The highest point of the day, where two candles agree, is exactly where the spot is. So we draw this little line at 544.65 and 10 cents down as well. So we can cover both this little zone here for this little candle here and this red candle here, draw it all the way over. And the idea is that we do that specifically on the 5-minute chart, specifically only for SPY, that ticker. And once we go to the 1-minute chart, we have to wait for things to come up, tap it, and push it back down. That way we could take what's called an option put, as talked about on the channel as well. Nice thing about these things is that this basically, if you buy an option put, on average, it only costs $100 for one. Personally, I buy 100 of them, so on average, it costs about $10,000. But you can basically start anywhere you want to. And trades like this, what I'm going to walk through, how it works, etc. If you buy and where this spot is where it says entry, and you sell at the first spot over here where it hits this blue line, which is called a take profit one, this is not only $100 of a win. If you put in, for me as an example, if you spend $10,000 for 100 contracts, this is about a $2,000 gain of a trade. $1,500 to $2,000 depends on where that specific entry is at, really, right? But this is a huge move, and you don't need very many of these to really be successful long term, right? So that's why I focus on quality over quantity as a whole. But this is again the concept. We wait for it to come up to hit this zone, and we wait for a green candle basically to hit this red zone up here. So the first little green candle is where I have this little Z identified. The Z stands for a zone candle because it's a candle that came up to hit the zone on this 1-minute chart for specifically SPY that we're trading. The next candle, it needs to start reversing down, showing proof that it's pushing back down in the direction that we want, because an option put is basically us saying, hey, we think directionally this thing's going to start falling, and as a result, we deserve money from that. But very simply. And as a result, this being the first zone candle on the little red, the green candle here, the next one being reversal because it's showing that it's reversing. Next thing that we want is the confirmation candle, just to show proof that it's confirming that the reversal candle was correct because it's going down still, right? Hence we have the little C drawn on the spot. And you can see this candle here for confirmation, it's lower than the R candle, hence the directionally is correct. And the nice thing about this is that this is a very, very, very small candle on the body of it, this little red piece. So that's perfectly fine. And then we have our entry candle where the E is identified, and we basically enter exactly on this spot here, and then we'll exit whenever it gets to our take profit 1, take profit 2. That's, as mentioned, defined on some of the other videos specifically on how to exit. But basically the gist of it is this is on the 5-minute chart. So we're entering, exiting, etc., entering over here on this spot over here. And we look to the left and say, where's the closest zone where two candles is basically next to each other, and then that's basically our take profit. In this scenario, it's 544.11. Whoops, 0.11 over here. We have this line and draw it all the way over. And once we do that, it mirrors it on this 1-minute chart, and that's where this take profit 1 starts. We go down here to take profit 2. We have this zone, which is the next zone at 543.85. Draw it all the way over. We have our take profit 2 in this scenario. And you can see, realistically, it did hit the take profit 1, but it broke completely below it and actually hit take profit 2. And then it bounced back up. And realistically, it came back down again to hit it in the same spot. So you had multiple chances to get out A at TP1 for, like I said, $1,500 to $2,000, or take profit 2, which you don't even want to know how much money that was in the first place. But one of the core, before I get into the qualities of this being even furthermore, just documentation wise, why it's a good trade, is that this is where you're entering. As mentioned, your stop loss can be one of two spots, here or up here. But in this scenario, right, you're willing, so we'll just take the bottom piece. You're willing to only lose this, that amount here, but you're willing to gain all of this. So that way you're risking way, way less than how much you're willing to gain. So realistically, again, this makes sense because you don't want huge candles, otherwise they eat up all your profits and you'll be risking way more. Hence, as I mentioned, and the other kind of slide basically, where I talked about, let's pull it back up. Go back over here, scroll up, that you want to do high quality trades with low risk rather than low quality trades with high risk, right? That's the kind of concept there. So that's this piece here. So this is a good trade. And if we go down, there's 5 components to an A plus setup, which is, we change the color here, change it to red for the scenario. It's a major zone. So we have that identified, which is that 544 piece as mentioned. We have the ZRC candles as mentioned, which are the zone reversal confirmation entry candles that we talked about. So it's reversing off of it perfectly. A sideways trend at that specific point in time, which means that 9:30 even to 10 o'clock, even the 10:30 is an example. If like we just go to 10, well, it's supposed to be straight. Well, 10:30 area, you see it's literally just going sideways, right? It's not doing any crazy stuff up. It's not doing anything crazy all the way down. It's just visually going sideways from that perspective. Delete that. All right. Small RC candles, right? The RC is this piece here. The zone candle being big or whatever is fine. The RC candles need to be small. RC candles being these here. So we have, here's a little trick to this. The reversal candle is a decent size, and I'll show you what big, small, etc. looks like. The confirmation candle, ideally, I want this to be very, very, very small, or the reversal could be very, very, very small, and then the confirmation candle can be the size of this reversal. Doesn't matter. I want these candles to be small. The last thing I want is for my entry candle for the beginning of it. This is fine, but I don't want it to start here, right? If it starts there, then my take profit 1 is here. So I'm willing to win this but lose all of that? That's stupid. That doesn't make any sense, right? So small RC accounts. And last thing, clear same day take profit exit, right? So we're able to, on the 5-minute chart specifically, say, hey, if we're entering on this spot over here, if I can get that drawn correctly, in this spot here, on the chart for today, because this is only today specifically, it's basically saying, okay, hey, there's some data here that says at 544.11, there's 2 candles next to each other where it's green and red. I can draw it over, and then there's some data for me, right? But as an example, like let's just say, here's an example of what something that's not the same day would look like. If something came up, broke here, and then started bouncing upward, right? Because you could take plays when it goes to that bounce. There's no zones over here to say where a take profit is. Now I have something called multi-day zones that essentially tell you you can go to a different day, find your take profit, et cetera, et cetera. But why do all of that? That's not an A plus setup. That's a little harder because you have to look at past data to find out where you're going to exit, where there's some friction, et cetera. But this is an A plus setup because it's so simple that all you do is look for the same thing every single day and every single time. So ideally, if this isn't set up, you do not take the trade ever, realistically. And I mean ever. So this is the A plus setup for option puts. Now option calls are over here. This is the same exact thing, right? Let's take a screenshot of it for us really quickly, and then we can talk through it right here together. And then zoom in a little bit. All right, so same thing, right? And this one's a little bit more clear, and I'll take my time on this one. We have a major demand zone in this scenario. It's just basically before 9:30 a.m. CST, what's the lowest part of the day where a red candle and green candle are next to each other? Literally that. And once you do that, you draw the line plus 10-cent size rectangle on top, and you wait for a bounce to basically happen. It's literally that simple. This went down, didn't happen. Got close, didn't get down to bounce. This went down, didn't get all the way down to this little green spot. Finally came down over here. Once it came down to this spot, then you can go up here on the 1 minute chart, basically go ahead and essentially say, okay, great. We got a zone candle, reversal candle, confirmation candle, boom, entry candle, and it's not very far away. That's fine, right? And as you can see, let me erase this real red piece here. Erase that and erase this. So this candle here is very small, right? That's the confirmation candle. That's, again, as mentioned before, you want a small, one of these candles being a reversal or confirmation candle to be small. Because I know you're looking at this, you're like, okay, this is a play over here though, but this isn't high quality. We'll talk about this very soon, but it's not. Because think about it, if this is zone, reversal, confirmation, and your entry is all the way up here, and your take profit is up to that, and your stop loss is potentially worst case scenario all the way down to that, that's a horrible trade. Let me move this over so you can see it. That's a horrible trade. But versus this one, you're entering and your stop loss is here, but your take profit is all the way up there, right? So it's a matter of not taking every trade just because it bounces off and you see a zone reversal confirmation entry, because that's an issue a lot of people have. If we go back to the charts over here, a lot of people look for, okay, it's a major zone and then there's ZRC candles and maybe there's a sideways trend, but they miss out on the small RC candles. This is fundamentally the most important piece, because the worst thing that can happen is you jump in and it doesn't go as planned, essentially, you know? And then especially clear same day expiration, same day take profit exit, excuse me. So next thing is a B plus day trading chart. And now you may be looking at this one, wondering what's wrong with this, because it looks like from a financial perspective, it worked out just fine, right? It was profitable. It hit the major supply zone, right? There was in this scenario, major supply zone over here. Let's go ahead and zoom in. About 160, all right? We had a major supply zone over here. It came down to, make sure that's the right spot. Yep, came over to hit this area and it fell downward essentially. So it's fine. It's perfectly fine. So we have the major zone. On the 1 minute chart, we have the confirmation candles, right? We have zone, reversal, confirmation, and then an entry, right? So this one is fine. This is a check mark. This is a check mark. It's a sideways trend, right? It's doing this sideways. That's fine. That's perfect. So there's a check mark on that one. But the problem with this one is that there's no small RC candles as a whole, right? This green candle is fine. That doesn't matter the size. This red candle right here, decent size, but it's okay, right? But then the following candle, the confirmation candle being the one here, it's not a small candle like the one before, the two before actually with the A plus setups. It's a decently sized, right? And so because of that, this is literally what happened. We have our entry candle where the yellow circle is, and we have our stop loss from either the top here, right, or the bottom of this. And our take profit in this scenario, take profit one, is the purple line being VWAP basically. And so it's about here. So this is about a 50-50 win ratio. You don't want to then take that. You don't want to put in a dollar and either make a dollar or lose a dollar. You want to basically, in theory, put in a dollar, be able to make, let's just say, $3, and potentially lose maybe 50 cents or 25 cents, something like that. You don't want to have it so close from an R to R risk to reward perspective, right? So that, and then of course, if it goes to TP2, realistically it looks better, but you can't always bank on take profit 2 being this little blue line down here to be hit. Sometimes take profit 1 is the only thing that's being hit in that scenario. So that's that, and that's one of the, and so this has also a clear same day expiration, same day take profit exit, excuse me again, because there's data down here. It tells you exactly where to exit and so on. So that's okay. But again, the fact that it doesn't have this makes it not as good of a trade. Did it work? Yes. Would you have made money? Yes. But I'm telling you, over a long enough time horizon, this will and for sure mess you up, because if you take trades like this, and let's just say two of them lose, because of course, this strategy is not perfect. No strategy is perfect. No strategy can win 100% of the time. That wouldn't logically make any sense. You're guaranteed to win 70% of your trades, but you're also guaranteed to lose 30% of your trades. Whether you're taking, and that's from a mixture of a couple things. One, every trade won't work. But two, if you take more than A plus setups, period, even though they visually may work sometimes, the times when they don't work, you'll lose such a good chunk that it becomes stupid and it eats up all your profit. As a result, I'm telling you, when this trade like this happens, when I'm trading, I don't take the trade. Don't care. Oh, it went on without me. It did all this profit and doing all down here. Don't care at all. Doesn't matter. So the next thing, if we go over here, this is a B plus day trading chart. So let's jump into what does a C plus day trading chart looks like. This is one of those days where, let me go ahead and screenshot this. You can see the entire day, for the most part anyway, was visually going up. So it looks simple, but as the bottom mentioned, it causes a lot of FOMO for a lot of people, because they're thinking, if I just get into an option call anywhere, I'll just make a bunch of money. And you're like, I haven't jumped in anywhere. Apparently I'm stupid. I like something's not working here. Something's not clicking. But again, same philosophy. It's where's the major zone? Major zones move because the trades are continuously moving in the scenario. That's fine. But we have the major zone here at 533.57. That's fine. We have the RC candles. Well, if we have to find that on the RC candles, we have zone candle reversal. We have the confirm. Oh, excuse me. It's actually almost messed that up. Confirmation candle here, and then we have the entry candle on this little green one over here. So, and the reason this is not right here, a confirmation candle, it's because it's still majority inside of the zone, as mentioned inside of my checklist from before. Whoops. If you want more details specifically on a lot of that stuff, that's inside of this MKU checklist from, again, step 1 to step 16.2, basically. That's in another video if you want to go more in detail from that perspective, step by step, why that's not necessarily a confirmation candle. And you know what? While we're at it, actually, I'll literally just pull it right back up, go right back to it, because from the sound of it, I'm probably going to need it. And I'll show you exactly where it is, actually. So we have candle analysis. It's inside of the candle analysis piece in this area, and it is from 9 down. So as mentioned, have a clean zone candle that's 100% touch the zone for retest. 10, have a clean reversal candle that pushes away from the zone and is small in size. That's fine. 11, be a clean confirmation that is small from candle perspective. If large, don't take it. And this is the piece here. Majority / 51% must be outside of the zone, body and wick included. So as a result, the one that I mentioned at X, it's very small to see, but it's not 51% outside of the zone, so it's not a confirmation candle. Hence why the yellow circle is majority over that candle is the true entry candle. And again, conceptually, you want it anyway to, we have the zone, which is in this spot here, right? You want it to, on the 5-minute chart, come up. If you know it's a full trending up day, go up, go down, and as mentioned, it basically breaks upwards to the upside. So you want this visually, essentially. That's the kind of concept that you do want. Let me delete that. And so that's the entry candle there. And if we go down, this is not a sideways trend, right? It has small RC candles. You can see on this, all these candles are small. That's perfectly fine. Majority are small anyway on the entire chart, but these specifically are small. That's great. But it's missing two things. It has this, it has this. It does not, it's not a sideways trend, right? It's visually going up, right? So as a result, this is not a sideways trend. Also, because it's not a sideways trend, by default, there's no clear same day take profit exit, which taking two things off of the A, right? It's basically, that's why this is a C type trade. Because a lot of the times this becomes really, really hard for people to continuously draw zones over and over and over because the day's trading. Because keep in mind, a major supply zone is the current high of day where green and red candle are next to each other. So at this specific point in time, it was at this area, 533.57. But example, let's say it was this time over here, right? So 10 or so, this is the new major supply zone. And you would delete this. So now you have to wait, see if there was a new tap on there on the 1 minute chart. Well, what if we go over to 11 o'clock? Then, well, this is the new major supply zone. Well, what if we go over to 1 o'clock, $1,300 over here? Well, then this is the new major supply zone. You have to delete that. So it's a constant battle of always watching the chart for when you're going to draw the new zone. But the catch with this is that technically you're not supposed to, as mentioned in my other MKU checklist, you're only supposed to be looking at the chart for a max amount of 10 minutes a day. So this makes things harder because technically the more you look at the chart, the more you may force a trade to actually happen. As a result, this is not an A plus setup. Sure, the whole day may just keep going up, but you may at some point, a lot of people do one of two things, which is A, they start saying, okay, it's going to start reversing back downward. I'm going to get in an option put because I know it's going to start falling. Whoops, delete that. I know it's going to start falling down like crazy. And then people do that all the time. That's part one. Or part two, they just jump into a call anywhere because they feel missed out because from 8:30 a.m. CST to 11 o'clock. All it did is just run up. And then it just so happens you say, screw it, I'm buying a call. I know it's going to go up for the next 2 hours. I'm running it. And you bought right here, right in this spot right here. And then it fell right down. And then, of course, you know what happens. You sell right here. And the moment you sell, it just shoots up. and you would have been in profit right here. Then you say, screw it, I'm buying it again. I knew it was going to go up. I was right. And then before you know it, it just runs right back down, right? And then you just end up selling here. And as soon as you sell there, what does it do? It's like it just knows you're actually selling the stupid thing, and it just runs back up for a new high. And then you end up losing one trade here, one trade there, and you probably force something later on potentially for 3 trades. That's the worst possible thing. And it's because the market's tricking you to say it's going up, just go ahead and just throw the money at me. When that's not the game. The game is you want the same boring trade every single day, which is this being an A plus day trading chart here on this spot, being it came up for the option put, tapped that area, fell down. That's it. Literally. And then the other one, which is the A plus day trade chart, it came down, touched the major demand zone, bounced up, boom, that's it. If it doesn't do that, you don't need to be doing the trade. I'm telling you. You can start doing later on. Maybe you get so much better. You can start taking these more risky trades. But for me, I don't think it's worth it. Why risk more money that you don't have to? It's not like you're consistently profitable yet anyway. So what are you doing? Now, if you already have tens of thousands, hundreds of thousands, millions of dollars, that's fine. Take some risky trades. Screw it. You know, I want to play, but you want to play in the little play or whatever a little bit. But until you get to that point, don't do that. Only do A plus trades. And again, we'll talk about what that really looks like long term, how many trades that may be, etc. But this is C plus trades. It looks simple, but it causes massive FOMO, which is fear of missing out. Now,
if you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
do a little pop quiz. What grade is this chart here? And I want to give you a hint before you say anything, right? In the comment section below, quickly, by the way, you feel free to pause the video, but analyze this chart. Let me know, is this an A, a B, a C, or maybe something we haven't even talked about, maybe even a D or an F? What grade is this chart? Do you think where the circle is if this is the entry? Leave a comment in the comment section below. The only hint I'll give you is that setups like this one here helps you avoid messy, choppy plays on the left, and instead only take the same boring trades every single time. So I just mentioned the boring trade essentially before. And maybe if you did watch the other video with the MKU checklist, you'd realize that this was actually a trade from that same checklist that I really broke down, analyzed, etc. in a lot of detail. So the short answer is this is actually an A plus trade, right? Let's walk through it. Let me go ahead and screenshot it. So hopefully you got that right. So let's go ahead and move this to 160%. Well, close enough. 180 it is. So this one, direction is going down, right? But we have, well, whatever. We have its zone. It's up off of a major zone for one. It has the correct ZRC candles. It's a sideways trending day. Basically, you see we had the major supply zone over here, went all the way around, came back to hit this area and still bounced down. It's a sideways trending day from a big picture perspective on the 5 minute chart. Sure, it went down and then it did this and it came back up. It's fine. It's still a sideways trending day because it's between this area, right? And then if we go back, right, you have to remember what are the next kind of qualifications when it comes to this is that if we go back, whoops, move a little too fast. We need small RCE candles, clear same day take profit exit. If we go back, small candles, we had this little guy outside of it, so the confirmation candle, it's outside of the zone and it's decently small. Even the entry candle in this scenario was small, which was great, right? Went down a little bit from a profit perspective, came back up, hit this area, came back, fell down, hit your take profit one, this spot here. And it was a really, really, really great trade. Take profit one, by the way, is identified from this 542.40 area, drew the line over here, and then you draw it over, and then that's basically that take profit piece. But really great trade, really simple trade. And again, you can see this was where that entry was. This, sure, it kind of worked, but you don't want to do this. I don't care if if you waited the whole day for this trade to come up, hit the zone and fall down, and this is how ugly it looked. If it's this ugly, don't take the trade. It's these, which are A plus or nothing at all. So let's go back. So hopefully you got that. So next thing, let's look at D. D plus day trading charts over here. So this guy here is an interesting one. A D plus in this scenario, the only thing that they potentially have in common is it's a major zone. It has ZRC candles, but it's not a sideways trending day. Definitely no small RCE candles, and for sure no clear same day take profit exit. So let's analyze this chart here. Screenshot that. And let's go ahead and zoom in. So check this out. So on the 5 minute chart, we have well, really quickly, you see this dotted line here? This is the current day that we were trading potentially live. On the left side over here is the day before, FY. Just want to call that out because we're going to reference that. So for this specific day, before 9:30, this over here is the major demand zone. This over here is the major supply zone, right? So you need both of those always drawn. Once you draw the 10 cents over, it came down, tried to hit it, never gave us a ZRCE FY on the 1 minute chart. You can see this is when it came down, hit this area, never gave like a clean push upward essentially, and also it broke through the zone, which kind of made it a weak zone. So it's also not a trade you want to take, as talked about in the checklist. So it finally broke below, came back to kind of hit this area, bounced around, came back to hit this area again. Finally gave us more of a cleaner ZRCE, being zone candle, reversal candle, confirmation candle, and then the entry candle, and this one right here. But it's for one, it's very, very far away from the actual stop loss, which again would be here or here. But also, it literally hit take profit one right away. So ideally, if it's right on take profit one, more than likely it's going to start reversing because it's hitting some kind of friction. Sometimes you could try to take the play, and once it breaks below take profit one, ideally you want to get to fall down further. But if you did do that anyway, it's even further away from your stop loss area, which makes it even much more a risky trade. Because think about it this way. Let's just say, let me delete that. Let's say you did enter in this spot right here. Right away, it went against you to hit this spot here. You're going to be down a decent amount of money when you really think about it, right? Sure, it worked out in the very end, but at what cost, right? you risk so much. You want plays that are immediately small candles. If it starts going against you, it's a very small amount that's going against you. And regardless, you stay in profitability long term, and you stay in. If you are in, non-profitability, losing money, it's very, 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 very minuscule, very small, very almost insignificant. Because if you start taking these trades more, you're going to start taking more of these anyway. Because there's more trades in there. Because technically, right? Think about it. If there's A plus setups, and then there's B plus setup, C, and D as we're at now. If you just start taking all of them, there's more trades available. If there's more trades available, and then from a numeric perspective, you can lose more trades because there's more trades available. Does that make sense? Right? Let me know in the comment section below if that makes sense. Because technically, you want as few trades possible for you. And if you want as few trades possible for you, then the game begins. How many times can I say no to specific trades? So I can only take the highest quality A plus trades. And when I take the highest quality A plus trades, I can be consistent at doing the same boring, quote unquote, boring trade. And once I do the same boring trade and I'm just consistent because it's the same thing, then I can start adding more money to my account and continue to still do the same boring trade, and then I'll make money. But if you're doing an A plus setup and then you change your brain, okay, I need to learn how to do. Let me go back, right? If you like, this is the last thing you want to do. People make this misconception. They'll be like, okay, I'm gonna do an A plus setup. This makes sense. Okay, also I'm gonna learn a little bit about these B plus setups. So I need to get used to having my heart racing faster because there's more money if it goes against me, so I have to be used to the fear piece. That's fine. And then we go down, okay, C plus setup. Okay, if it's an all up trading day, I have to change my brain to always know, okay, I need to go back to the chart, and if the major zone's changing, I can jump in and change the zone. Okay, and we go back. Okay, I can't watch this chart too much. I need to, but like it's so much different stuff. And then you go to the D. We went through that. Then we go to the D, which is that plus the fact that again we didn't even talk about it. Let's go back. Where are you exiting, right? The take profit is in this scenario from the day before over here. And the next take profit just so happens to also be the day before, but it's really right here, all the way down here. Are you really telling me that on all the times that you're going to enter a trade, it's going to rush down like this to this take profit too? That more than likely is not going to happen. This is a huge trade. Like, do you not realize that? Like, let's go back. Think about this. Even with the A plus setup, right? That same kind of visual was if we had entered on this yellow candle here, and then the first take profit is take profit two, and then the next take profit is this little purple line at the top, which is VWAP. That's a far trade. It's way too huge. You can't expect trades to potentially do that. I know it's not exactly right, but it's very close to that candle so huge. Usually it's going to hit some kind of friction, bounce back, etc. So to expect that and to also have so many different trading philosophies in your head of what to do, when to do, and how to do it doesn't make sense. So again, for me and a lot of the students that do my one-on-one coaching program, it's A plus setup or nothing. Let the trade go by you or nothing. Say yes to very few trades and add fuel to the fire by winning more of those simple, basic, not fun, excuse me, boring trades, or don't do it at all. That's the concept. If you're doing the trades and you have this flashcard up, you see this is forming, cool. Get up, walk away, go work out, go play a game, go work, go do whatever. Do whatever you got to do. And you know what's funny how I just said that? I haven't physically worked a job in so long that my first kind of thought process was to go do something for myself, right? Or I guess the last part was to go work, I suppose. But that's the core concept. It's not to always be trading every single day because you can trade. Trading's not about working 40 hours a week. That's a worker mindset. This is a business mindset. It's about doing things efficiently and doing things as little as possible, but being repetitive. Business, once you get good at business, and same with trading, it's very boring. It's repetitive. It's the same thing every single day, no matter what. Sure, there's some fun times or whatever, but if you're good at either one, it's very boring. Small side tangent. Warren Buffett and all the people like that, they don't make very many investments. Look it up. I'm not even going to talk about it here. They don't do very many. They do very, very small amount, but in large quantities. So this was a D plus day trading day. Now let's talk about F, right? And if you wanted to definitely see F, and a lot of people do this on, unfortunately. It is a matter of not even a major zone, no ZRC counts, just jumping in too early. Not a sideways trending day. You can see it's just falling down for one. No small RC candles. But hey, it had a clear same day take profit exit, at least in this scenario here, anyway. So if there could be something with lower than an F, which I didn't have in this scenario, then of course that would be it if you didn't even have that component. But again, it would be a very, very, very hard trade. So if we zoom in, right, 5 minute chart, this is a minor zone, right? The major zone would be up here. But in this scenario, this is if we mess up everything. We have this little minor zone over here, which is two candles next to each other, but it's not the lowest point of the day, right? The lowest point of the day would be here from these two candles, basically. But if we just drew a zone anywhere because we're just thinking it's a zone, I want to be able to take a trade, and oh, technically there was this thing, so it was important, so we should always trade that. Don't add stuff to the strategy. The strategy is the strategy because it's been tested off of 520 plus days of data for me to make sure this works. So don't do that. Don't ask if it's does this work for ES? Does this work for Tesla? Does it work for etc.? Every ticker is completely different in its personality. They move differently. I say personality, but I'm being honest because also different people that trade this, right? Retail traders being us, we trade this stuff, but that's fine. We're not moving the entire market. The people that move the market are the guys with the big money, the hedge funds, etc. They're the ones buying stuff, and if they're buying stuff, they buy it in a particular way, right? They move things in a particular way per ticker. So they won't be caught from a manipulation perspective. Neither here nor there. Different topic. But so because of that, every ticker moves differently, especially depending on how many people are involved in that market. So this is only works for this. And technically, you only need one trade, one ticker to be able to be successful anyway. You don't need two, you don't need three, you don't need four. You need fewer trades and more money. You have a money issue and a quality issue, not a more volume issue of trades. You don't need 16 trades daily. You don't need 5 trades daily. And here's what's crazy. You don't even need one trade daily. You know how many trades I take whenever I'm really, really, really active with trading? It's one trade every other day, which is technically 2 to 3 trades a week. Are you seriously trading more than me and you're not as profitable as I am? Think about that. And that's my day trading stuff. For swing trading, because I have a different strategy when it comes to swing trading, but still on SPY, FY, I take one, get ready, one swing trade a week. That's it. So I take 4 a month, which is a max, by the way, of 52 a year, because 50 weeks in a year, right? 52 in a year. And so day trading wise, 52 times 2, what is that? 104. So 104 trades a year of what I take from a day trading perspective. 52 a year from a swing trading perspective. If I'm that active, I'm not even that active in the first place, realistically. Because as long as you put more money into it, it's fine. Like think about it from a capitalization perspective before we get into this F piece. For me, if you had 100 contracts, you earn about an average of 2K, whoa, 2K per trade just from day trading. I mean, realistically, let's just say you did the 2 a week, and there's 2 weeks, and out of the 2 weeks, that means you did 4 trades. Well, 2 times 4 is 8K. Can't do that. Let's see, is 8K. For most of y'all, that's more than enough. So technically, if you really wanted to do it, you could actually do one trade a week if you really wanted to, and you only specifically took that highest quality trade. From a day trading percent, I'm not even talking about swing trading. I'm actually saying you could as few swing trades that you could do the same amount from a day trading perspective because you're saying no to the B's, you're saying no to the C's, you're saying no to the D's, you're saying no to the F's, and you're only taking the A's. Just as a hypothetical, and that's me being realistic because well, hey, you probably have a job right now, so you might. Sure, you have Monday, you have Tuesday, you have Wednesday, you have Thursday, H, and you have Friday over here. Let's draw this over. Is that everything? 1, 2, 3, 4, 5. Yeah, those 5 days. So if you take a trade here, but you're busy here because you have a life, and then some stuff happens, you can't trade on Thursday, and then Wednesday, and then Thursday, I don't know, you just couldn't find a trade. You were active here, but then Friday comes along, and you make a trade here, or let's say you don't for the scenario to continue on, right? You don't make a trade here, but you did a trade here. It was fine. You made 2K. If you made 2K here, why do you need to take these other trades anyway? A lot of these other people on YouTube and this and that, they show you how to make this big money and make all these multiple trades and stuff. That's stupid. Unless you want to trade 40, 50, 60 hours a week, that's not the goal. Your goal, I thought, maybe I'm crazy, is a vacation. O-N. I can't spell, by the way. Hopefully that's right. I can't spell, but I got money, so it's okay. But that's the idea. It's basically for you to trade as little as possible to make a good amount of money and be good. So if you can do this, that's the goal. 2K, 1 week, boom, done and done. Go live your life. Not taking these stupid trades like this, right? This is not a major zone, and this circle's supposed to be on like this one. But it's like if you entered on this spot up here, even because you're rushing, because it was on a, remember, it was like on a full downtrending day. You're just trying to jump in anywhere. Don't break the strategy just because you think you need money today. If your goal is one trade, maybe two trades a week, realistically, or one trade every other day, that's fine, right? So take a trade Monday, take a trade Wednesday, take a trade Friday, whatever the goal is for you, take as few as possible. Only take them when you're 100% certain. Before you jump in a trade, if you have even the smallest amount of anxiety, don't take it. And you may say, well, Maurice, I'll miss a bunch of trades then because I'm just have anxiety from a whole bunch of from this trading period. Cool. Well, let's play a game. Let if you keep doing this, keep letting trades go past you. Once hypothetically 50 trades go past you, the anxiety is going to start going away anyway because you're like, okay, I get it. I was definitely full of anxiety, but hell, 50 trades have worked in front of my eyes. I should just click the damn button. I'm just being a little crazy at this point. And then you get over it. But that 50, as an example, is only possible from you having time in the market and you finding A plus setup specifically only. So if I'm really being honest, the only flashcards you actually really need to print out is this one here and, excuse me, this one here. All the other ones are just reminders for you to be like, cool, it's that one. I hate you. I don't want to be. Oh, it's this one. Don't want. Oh, uptrending day. Oh, that's great. Girl, cool, cool, cool. I guess I got a day off and I can go do other stuff. Remember, you start trading because you wanted your time back. You wanted to spend your time with your family. You want to go spend time getting physically fit. You want to spend time hanging out with friends. You want to spend time on vacation. You want to spend time doing everything else. It's not trading. So if you see a day all uptrending or all downtrending, walk the hell away. Stop thinking you have to do everything. So this is an F day, right? It has nothing besides a clear same day take profit exit. I don't know why I keep saying expiration. But yeah, this is chasing a downward trending day. So S day trading chart, which I had thrown in there because I thought it made a lot of sense. So this is an S day, actually, which S stands for when you're in school, satisfactory. To me, this is a satisfactory day. Let's say you were doing your trading. It was a Wednesday. This is one of the days you're for sure supposed to trade. You go in, you draw your major supply zone over here. You draw your major demand zone right here, right? It's a specific spot. And then you draw them over, and you draw them over. Oops, excuse me. Draw them over, and you go to your 1 minute chart. You wait for the first hit. You got an alarm. It went off as in the MKU checklist, and you want to put to the downside. And it goes up. It just breaks clean through, and then it falls crazy. Well, there's not a trade here, right? Not at all. It worked. It did fall down, like it made sense, but we want it to come up, barely tap it, maybe a small breakthrough, not a crazy breakthrough, but then slowly start coming down with some small candles. For one, didn't do that. For two, they're definitely not small candles anyway. Even if you tried to quote unquote BS this, what is this? The zone candle, and then I guess this is the reversal candle technically. This is the confirmation candle, and then this is the entry candle, right? In that spot. But again, too far away for one. Two, it's running down. Realistically, to go a little deeper, it's running pretty fast from the look of it. So you probably wouldn't even enter on this spot. You probably end up accidentally entering here because you're chasing it because it goes moving fast. Because when the candles are big, the price is moving fast. When the price is moving fast, you're not going to get that perfect entry. So you're probably going to enter literally right here, which is even worse of an entry. Again, sure it works, but for how long? This is a long-term gain. The point of being financially successful is capital utilization and capital preservation. That's the point, right? You need to preserve your money and use it in the right spots. That's what I basically said essentially there. So same thing, right? Even when it came to the demand zone down here, tapped it. Oh, look, it bounced up perfectly. Too far away. What is this? Zone candle, giant reversal, I guess confirmation. Entry candle here, too far. Don't want to do it. Doesn't look like my A plus setup, not taking it. Same thing happened here, literally. Same thing happened here, literally. Sure, it worked. And by the way, this is me showing you a lot of the trades that are quote unquote failing bad trades, but they actually work. You know, a lot of the times when you take these trades, they sometimes don't work. Of course, right? So it just so happens with the major zones, they really, 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 especially if you wait for a major zone and wait for ZRC candles, they can work more often than not. But the times again when they don't, it will destroy your account. And so here's the question here. What if you're so picky that no trades present themselves for the entire day? That was this day. This entire day, I don't know what day this is. This is not 4:30. I pulled up a chart that had the past 30 days, and this is etc. Whatever. Anyway, what if you're so picky that no trade presents himself? Well, the goal is to be profitable per month, not to trade every day as mentioned, because keeping money or financial preservation is much better. It's greater than losing money, right? Forcing, which is basically forcing one trade just because, you know? Because if again, you have to think about it too. If you're jumping in these huge candles and something starts going against you, you're going to panic and you're going to lose. Let's just say, because I've seen this happen before. This is a small one over here. Let's say you entered on this area here, because technically that is kind of the area, I guess. And then this huge candle goes down like this. If you're at 100 contracts, this is probably $1,500 of a loss because it's so far up and you have so much to lose and you're not even at the bottom yet. That's crazy. So this would destroy one of the past A plus trades, if not two, potentially how small the other one was, potentially two of those trades. You don't need that. It's the last thing you want to do. So next, let's go over here. So let's do a little another quiz. What grade is this chart here? Since we talked about A's, we talked about B's, we talked about C, D, and F, and also S as well. But so here's this spot over here. So what grade is this? Again, A meets all five criteria. B meets only four of the criteria. C meets only three of the criteria. D only two of the criteria met. F only one of the criteria. I really should have came up with another letter lower than F. I don't know, but let's left it let that. But again, the criteria is major zones, CRCE, sideways, small RCEs, and same day take profits, right? And this scenario is there's a zone here. Let's go ahead and screenshot this guy so I can zoom in so you all can see it so you can provide your answer in the comment section below. There we go. And let's zoom in again. So we have this zone over here, came over, hit it in this area, hit it in this area, which is fine. But as we see, we're talking about this specific area here. So what grade do you think this is basically? A, B, C, D, or an F? So the answer to this, if we go step by step, oh, I didn't get the bottom part, but it's fine. So one, it's not a zone, a major zone, excuse me. The major demand zone is down here, right? Two, this scenario, it's this where the circle is for the entry is not at the entry. The entry is actually up here, which is too far away, FY. But so it's zone candle here, reversal candle, and that one right here. No, why did that? Is the confirmation candle. So it's definitely not the zone. So for one, we have one check mark because it's not a zone candle. Two, this is not the correct spot for what the entry is. So that's two knocks already. Three, right? Sideways. Was it sideways trending? Yeah, it was sideways trending. That's fine. Small RCE candles, we saw it was definitely not small RCE candles. Same day take profit? Sure, it was same day take profit, so that was possible, right? So if we go back to that really quickly, of course, right? So since if we did as a hypothetical enter here, whoops, if we did enter here, we have VWAP, which is very close for a take profit, so it's a horrible take profit, it's a horrible trade. Um, And then two, if we do look at the take profits, the next one where two candles are next to each other is, that's still VWAP, is the next piece up here. So that spot up there, which is about in this area right here. So it worked up there. But again, sure, it worked out. But again, at what cost? Things like this don't always work out realistically. And again, where's your stop loss? All the way down here, and you're entering all the way up here. That's crazy, right? Actually, you're willing to lose more than gain, especially if the VWAP is your take profit for the take first one, because it's not very uncommon for something to hit you up and then boom, hit shoot on down, or break through a little bit and then boom, shoot back down. So the answer to this one, if we go back, right, was it a major zone? No. RC? Yes. Sideways? Yes. Small RC? No. Same take profit? No. So it's missing two, which means it meets only three of the criteria. So this is a C for that piece. And I specifically pointed this one out as a C because if we go back to our C up here, I want to make sure you understand this. The C in this example is an all uptrending day. That's fine. But just because it's all uptrending doesn't mean that all uptrending days are all C's per se. It can be uptrending days generally are going to be C's, but also if a day is pretty bad from that perspective, if we go back, go back to here, this can also still be a C for the grading of the chart basically here. Because again, it's not a major zone, so that's one RC candles. Oh, sorry, actually I completely messed it up. Because this one in scenario we made it a false RC, right? Because we did that. So this is still a no here. So no here, yes here, no here, and then yes there. So there's three no's being that it only met two criteria, so this actually is a D. But still, anyway, excuse me about that. This is still a bad quality trade because even when it comes to the D here, let's go to the D. This one was a put off the bottom of this to the downside, and it had different criteria from the one before. This is still a sideways trending day bouncing upward, right? Because and the only reason why it's so different is because we entered just early because we were just maybe happy about it bouncing upward. And you may be thinking, well, why would you enter early if you're excited about doing, jumping in this trade in the first place? Well, it's very possible, and it makes sense because let's just say we were trying to trade off the zone that we formed here. Well, it came down one pretty early back in this spot, two over here for a second time, three in this spot here, four, which we can see over here in this spot here. So it's kind of like, okay, I'm antsy. I just want to jump in the trade. It's going to work. I missed a whole bunch of stuff. Maybe I should have entered here because this was an entry candle, right? And okay, I'm just going to jump in the trade. But again, what if it didn't work? That doesn't make sense, right? It's the same logic as if I just kind of rather quickly look at this chart here, is if yeah, let's just say you went ahead and drew yeah, this piece here as a zone, and then you entered on this piece as a call, you would have lost money, right? Doesn't make sense. You can't just pick things just to pick things, basically. It needs to be a zone, it needs to follow all the criteria. And by the way, there was no trade over here anyway, I didn't call it out because the ZRC wasn't there actually. There was no ZRC candle formation period, not even including the size. But yeah, so sorry about that. But yeah, it only met two of the criteria, so this is a D. Next thing, what grade is this chart? Because this is a tricky one here. So this one here, let's go ahead and scroll it down, take a screenshot. What grade do you think this is in the comments section below as well? And this is the last one, by the way, and I'll leave you alone. Sorry. So this one here, let's zoom in. This one was an interesting one.
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that would be actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
Because we had The major demand zone down here, I'll just go ahead and give you that. This is a major demand zone. It's the lowest point of the day where two candles right next to each other. But then it very quickly went sideways and came down, hit it, and it started bouncing up. And I'll give you this piece here. We'll walk through this step by step. This is the zone candle. This tried to be a reversal candle, but there was no real clear confirmation candle after that. And then after that, we had some nice candles here. We had the reversal candle, and then we had the confirmation candle is the green one, and then we had this entry candle right here, right? And you may be thinking, well, Maurice, it's not green bouncing up. All the candles are two of those are red. Doesn't make any sense. Well, again, color doesn't matter. It's realistically about direction, as mentioned before. As long as it's going up and showing proof that it's bouncing, that's fine. So if we have, boom, our zone candle, all we're looking for is directionally our three candles going higher than one another. And you can see this candle's here, this candle's a little bit higher than the next candle, and then this candle over here is also a little bit higher. And you'd enter in this little spot probably up here as it's forming, hence why this wick is so big in the first place, right? And so it's visually going up, and then boom, it would have went up to a nice spot where this take profit was at 547.26, which is the only next closest zone from over here, right? Our entry is down here, 5 minute charts up here, draw it all the way over, and then that's our take profit. It was a nice, really clean trade, basically. So don't get tricked on the colors, basically. But again, nice thing, let's just say you saw this, you saw it was moving up, but you didn't feel comfortable that it specifically was not all green candles going up. Cool. Don't take the trade then. That's fine. Nothing's wrong with that. Who cares? Again, you need a very few amount of trades. What if the A plus trade happened on Monday, this trade happened on Tuesday, and then no trade happened on Wednesday, and then Thursday a good high quality A plus trade happened as well. You got Monday and Thursday, so you made two trades. As an example, that's more than enough. That's fine. That's fine, right? Or what if you miss this trade and maybe something else happened Friday? If you got one trade at minimum, sorry, at maximum, excuse, go backwards. Well, if you got at least one trade, that's fine. If you're not even doing one trade a week, either you A, don't know the full strategy, you can't be, and you're not able to identify the strategies of the trades for one, or B, you're basically saying almost no to too much because you don't have enough time to be in the market. Those are really the only two pieces there. Because you can't be overly picky. At some point, you're going to be jumping in trades because you feel like you are missing stuff. So this one, funny enough, it meets all the criteria. It is off of major zone. It is DRC. It's sideways trending day, specifically at that point in time because it started going this specific way. Oh, excuse me. Nope, this is not sideways. It's going down then. Excuse me. Even sometimes I mess up, as you can see. So this one, at this point over here, let's go get the tool. Yep. So by this time, it was downward trending. So we did miss the sideways piece here, but we had small RCE candles, and in this scenario, we had the same day expiration, same day take profit pieces. So the only thing we were missing was a sideways day, basically. And so with us missing a sideways day, we only had one piece. We met four of the criteria, which is a B. So this is a B day, basically right here. Let's just go over here. So that's that. But yeah, don't let the wins trick you just because they're huge wins. Because again, things don't always work as they seem. If you check this out, we have on the 1 minute chart giant zone candle, giant reversal, giant confirmation, giant entry, and it worked out. But where's your stop loss? All the way at the top. That's stupid, first of all. So this is an example of a trade working and meeting the B plus criteria, but overall being one of the worst trades you can take. If this trade didn't work, you lose all the losses from your past 5+ potential trades. It's not worth the risk. Use stop loss logic here. So if something's that far away from the zone, as mentioned before, right? Some people ask, what's too big when it comes to zone candle size, reversal candle size, et cetera, et cetera. This is an example of this is way too big. Don't even attempt to do this. If you're feeling antsy, close, think, or swim, walk away, go do something else. That's fine. Find a hobby. Or look at your phone, play a game on your phone, text someone, call someone. Distract yourself from it, period. You can't jump in this trade. Because again, what if it doesn't work? Because here's an example of it technically kind of not working. Because here's an example of how only A plus setups will save you. Here's an example of a B plus trade like the one before that actually does go wrong. So if this is a B plus trade, then you can only imagine messing up and taking a C through F trade that will completely destroy your account long term. Because again, let's gonna walk through this guy, screenshot this, and zoom in. So we have the major supply zone at this spot here, but we want it to wait for this bounce, of course, right? So we have the zone candle, huge reversal, giant confirmation candle, and then this was red at the time, so you enter on this spot here, and immediately it goes against you. This does not go down in this area where any of this take profit was supposed to be potentially at. It went sideways, went down, didn't essentially go to it, went over here, went sideways, sideways, sideways. You would have been panicking the whole entire time, and then it finally goes in this spot, whichever one, for break even, whether it be, or sorry, for a major loss, whether it be here for a loss or the top of that for a loss. And if you tried to continue to hold on, would it be even more of a loss because it continued to go upward basically as well, right? So you should be selling at your stop loss. So as you can see, right, you bought in here, but this was how much you were willing to lose. This will eat up your account, which is again one of the reasons why, from a philosophical perspective, all you need is a very few amount of trades to be successful. That's it. I don't know if that's philosophical. I don't know why I even threw that in there. To be realist, but yeah, from a numerical perspective, you only need a few amount of trades with a maximum amount of money that you can afford after you maximize your talent of identifying A plus setups, and as a result, you get dollar sign dollar sign. That's the kind of goal that you're going for. So here's a piece here of how to actually be consistent, because this is kind of the essence of what I've been talking about with these flashcards here. The average month has 20 day trades, 20 trading days in a month, right? Because they're basically business days. It's 20 to 22, varies. 10 trades monthly, which is one trade every other day, potentially should be the goal, especially starting out. That is essentially 2 to 3 trades a week max. So goal one is to take 100% A plus and S plus day trades only. The days where you don't trade are the S plus. The days where you do trade and you're only waiting for the specific perfect trades that look exactly like this one here and this one here are the only things you're looking for. Any of the other stuff, this and that and the D1 and the F1. Don't do that. If you don't see trades that actually work, fine, cool. Here's an S day, that's fine, right? Use the S1 to your advantage. Realistically, that's the goal. So that's goal one. Goal two is consistently by then win 70% of those trades by saying no to majority of the other trades that we talked about. Because think about it mathematically. There's 20 day trading days in a month. More than likely, there's 2 trade opportunities daily realistically. That's 20 times 40. 10 times 2 is 40. So that's 40 potential trades per month. So if you take 10 trades, right, if that's the goal, right, monthly, divide that by 40, that basically means 75% of the trades is you saying no to those trades. I'm going to say that again. If you only take 10 trades and there's potentially quote unquote 40 trades available, your goal is to say no 75% of the time to the trades that present to you, just even when they hit the major zone. Because when they don't, you will lose money. So think deeper about this. That means trading is about doing only high quality trades, period. And then you can become consistently profitable by ignoring 75% of all the potential trades that you actually see. Nothing more and nothing less.